What's going on, my fellow stock market trader and investor homies? It's your boy Kevin. Welcome back to Touchdown Trades. I've been away from the channel for a little bit, working on some other projects. I've been involved in some real estate deals that have been taking up the majority of my time, but we're back. I may do some videos talking about those real estate deals that I've done over the last month or two, but that's a different topic for a different day. In today's video, we're going to be breaking down Tesla stock, one of the most polarizing names, one of the most polarizing tickers in the entire market. You have one side of the case saying that Tesla is the next coming. It's heading to $1,000 a share. It's not only a car company, it's not only one of the first movers in the EV space, but it's also a tech company that is gathering all this data. It has such a bright future because of the development in this EV space and all the other projects they have going on over at Tesla. You have the other side of the argument, the bear case, saying that this is an extremely overvalued car company, that it should be trading alongside its peers like GM and Ford, and a valuation should represent such. And I've kind of steered clear of this argument. I have traded it, I have invested in it, and I've made a decent chunk of change in Tesla. However, I have recently sold out of my entire Tesla position, and I think Tesla stock is going much lower. I believe Tesla stock is a big, hard sell. I'm not talking about a little insignificant pullback or correction. I'm talking about a drastic price cut, a crash, if you want to call it that. And I'm not trying to spread FUD or fear to those who are bullish on Tesla. I'm just going to be presenting my case on why I think Tesla could be trading for $60, $70 a share in the near future. Right now, we're trading at $185 per share, and the market is already started to tell us that things may be starting to correct, not only in Tesla, but tech stocks, the entire market as well. We were trading up at $414 per share just a little while ago, and now we're trading down at $185 per share. We've cut more than half of the valuation from Tesla in just the last couple of months. As of today, Tesla has a market cap of a little more than $500 billion, $535 billion on sales of $74 billion. Tesla's been growing quickly. The numbers have been very good, with net profit of $11 billion. All right, we got cash per share of $7.21. We have a price to earnings ratio of 56, not very good. And we have a Ford price to earnings ratio of 32, also not the best. The Ford PE is a number that I like to look at that incorporates projected future growth on today's price versus today's earnings. So it's telling us that Tesla is kind of overpriced, not only today's earnings, but tomorrow's earnings as well. And here's where that gets dicey. Tesla's been putting up these monster numbers, and that Ford PE is projecting that they continue to put up these monster numbers, that they continue to grow at the rate that everybody's expecting them to grow at. And here's why that gets tricky. Tesla has had the majority of the EV market share since inception. It came onto the scene, the first mover in the EV space, took the EV space by storm, and it's had upwards of 80% of the EV market share. But slowly and surely, other competitors are coming into the space like expected, and they're taking pieces of this EV market share. I had 90% plus of the EV market share. Today, Tesla has about 65% of the total market. All right, so 65%, you got Ford with 7, Kia with 5, Chevy 4, Hyundai 4, Audi 2, Volkswagen 2, Rivian 2, and then you got some other manufacturers down here making up the rest of that pie. Tesla's getting beat up here. Yes, this was always going to happen, but it's happening quicker and faster than we anticipated. These competitors are going to come in. They are going to be coming in with new designs that consumers like. They're going to be coming in with maybe better range than Tesla has at a better price point than Tesla. Tesla came onto the scene with this futuristic looking vehicle. It was new and everybody wanted one. Now you have new competitors coming on with, some would say, better looking vehicles with comparable range, comparable specs, and there's going to be vehicles coming out at a cheaper price point. MySpace was once the #1 used social media app in the United States. It died because people changed their taste in what they want. And people will change their taste to Tesla if they don't evolve. I'm sure they will. I'm sure they're working on things. And I'm not saying that Teslas won't be popular vehicles 5-10 years from today. But what I am saying that GM will have a popular EV car 5-10 years from today. I'm also saying that Ford is going to have EV cars. Hyundai, Volkswagen, Rivian are all going to be players in this space. And there's players that are going to be in this space that aren't even big yet, that don't even have 1% of the market share, that will have some market share 15 years from today. So that is my #1 reason for thinking that Tesla is overvalued at today's price. Tesla, the author goes on to say, Tesla's position is changing as new, more affordable options arrive, offering equal or better tech and production build. Given that consumer choice and consumer interest in EVs are growing, Tesla's ability to retain a dominant market share will be challenged going forward. The S&P Global Mobility predicts that the number of battery electric nameplates will grow from 48% to 159 by the end of 2025 at a pace faster than Tesla will be able to add factories. And here is the second reason, the clown shoe effect, right? When you're a company growing so quickly, you have to build all these new factories to keep up with demand, right? Demand is off the charts. You got 85-90% of the EV market share. You're absolutely crushing it. You're kicking ass, taking names. So you build all these gigafactories, right? Well, we just saw that these other companies are coming into the space. They're taking market share. So what happens if you build all these factories, spend billions and billions of dollars, billions and billions on these factories, and then your market share starts to dwindle. Your market share starts to dwindle, and eventually you have too many factories based on your market share, based on your production needs and the demand for your vehicles. It ends up being a situation like we saw in Detroit. These factories start to shut down. Your growth slows to a halt. Eventually, market saturation steps in, and you have clown shoes. Your shoes got too big for your feet. You got out ahead of yourself. You spent too much money on these factories. So it's really a thin rope. It's a tightrope that Tesla's having to walk in order to keep up with demand, make sure production is able to keep up with demand, but also make sure that you're not getting out ahead of yourself. All right, so if you're looking to invest in a auto manufacturer, my favorite auto manufacturer right now is General Motors, hands down. They make the best trucks. Their cars are decent for American-made cars, and they're coming into the EV space full steam ahead, right? Let's look at their market cap. $55 billion. $55 billion is their market cap. Nothing to sneeze at, but remember, we just said that Tesla is trading at $550 billion. So, for 1/10 the cost, you can buy one share of GM stock. That is insane to me. Now, I know the Tesla bulls are going to say, well, GM's not a tech company and Tesla is a tech company. Why not? Why not? You don't think GM can use the same model as shutting down all these brick and mortar dealerships and setting up these remote spots like Tesla has? You don't think GM is watching Tesla and trying to figure out how to cut out the middleman like Tesla has, lower that overhead cost, get into the EV space? Of course they are, and of course they're going to do it. And they're coming in full throttle at a much cheaper valuation. This EV game is still on the first lap of the race. We've been maybe, 10 years now in this EV game? There is still a long way to go. Tesla may end up being the BlackBerry of the EV space, and we don't know yet who's going to be the Apple of EVs, but at 1/10 the cost. So if there was a 50-50 chance, and I think GM and Tesla are 50-50, neck and neck on who's going to be the ultimate winner 10 years from now in this EV space. If there was a 50-50 chance, you're going to the horse races, you're going to the track, you're a betting man. A 50-50 chance that horse A wins and horse B wins. You put $1 on horse A, and if that horse wins, you get $2 back. But if you put $1 on horse B and that horse wins, you get $10 back. What horse are you going to be betting on? I'm going to be betting on horse B. For 1/10 the cost, you can buy GM. It's a no-brainer. Look at the Ford PE. Remember, Tesla's Ford PE was in the 50s, I believe, or the high 30s. GM's 6.59. Their price to earnings growth ratio, 0.43. Their price to earnings right now is 6. All right. We're expect earnings per share this year growth of 54% and 15% earnings per share growth over the next 5 years. Sales quarter over quarter are up 56%. It is stupid growth at a stupid cheap valuation. And it's held up better than the overall market has. It is going to continue to be a player in the EV space, growing that market share year over year, and Tesla is overvalued. So what do we do? What do we do with our Tesla stock? The first thing we do is we go to the link in the description, sign up for Moomoo, and get up to 15 free stocks. I think they can be valued up to like 10 grand or something crazy like that. It's the broker that I enjoy using, and it is giving the Touchdown Trades community free money if you sign up with the link in the description. All right, so Tesla, what do we do? What do we do? What do we do? If we go to the weekly, let's back off to the weekly. We can see that we've already corrected a good bit. There's gonna be some pops in this. There's going to be some pops, and I think we're going to see something like this. Overall trend is down with some drastic volatility mixed in. So what am I going to do is I'm going to use some options. I'm going to be selling calls way up here and buying calls above that. That's called a vertical spread. And what that does, if the market stays under the price of the call that you sold, you keep the credit at the time of expiration. It's a little less aggressive than selling or buying puts or shorting the underlying stock, and you're more protected. However, you're also basically the casino, right? Somebody's buying call options way out of the money, hoping that Tesla has this massive move to the upside. And even if I'm wrong and Tesla starts to trend higher, I still have a high probability of making money on this trade because I'm becoming the casino. I'm selling these call options that are way out of the money, and I'll sell that lottery ticket to the degenerate who is expecting a 30% move in the next 2 weeks, 2 months, 2 years to the upside. Doesn't matter. The probability says that Tesla will be under these call options that I'm selling at the time of expiration. All right, so that is my thesis. Let me know in the comments section. So just as to summarize it a little bit, I think Tesla is a great company. Great company. I'd be a buyer probably right now around $70. I'd be a buyer. That's still a huge drop, right? But I'd be a buyer about $70. I think it's a great company. I think they're going to be around a long time. I just flat out think they're overvalued as more competitors come in and start clipping off market share. Also, I didn't even mention that the CEO, Elon, is now running Twitter. A lot of his focus is on Twitter, probably the majority of it, because he just spent $44 billion. And, you know, he's pissed a lot of people off. He's pissed a lot of people off, and super liberal people who don't like what he's doing with Twitter may end up not buying Tesla because of what he's doing. I think that's going to be short-lived, and it won't matter in the long run. But it is a note to keep in mind. I love every single one of you guys. Let me know what you're doing with your Tesla in the comments. Hit that like button. I'll catch you in the next video. Until next time.